So, welcome along, everyone. It's Friday at last. We're at the end of the week. Today's been a really good morning for London sessions so far. We've had some good opportunities come in the markets. First thing we spoke about this morning, I put in the Discord that it was going to be a very highly volatile day. So you can see here all day high impact Euro news. We've got some USD news coming at 1:30 and then some more at 3 o'clock. So I definitely wouldn't be advising that anyone trades really probably until after 1:30 or even after 3 p.m. And by that point, when it's Friday, it's probably not the best day to actually take any of these trades anyway, because you do get a lot of reversals to enforce in that power of three movement on a weekly candle and things like that. So my thinking on EU, and by the way, guys, if anyone's not got this indicator downloaded yet, FX Market Sessions, I will put it in the Discord over the weekend for the exact details, but basically it highlights certain sessions, and I've put a bit of a personalized ring to it. So I'll send in exactly how I've done it. But when we look at where we were and where we are, we saw yesterday, okay, price dumped hard with news. Okay, price dumped hard with news. Now, when that happened, obviously we got into the PM session. I think we were around here for London session. So if we just kind of get rid of all this up to maybe 7 a.m. So this is where you may have been when you first entered into EU today. And the first thing you can see before anything else is that we're so bearish now. We were pretty bullish, pushing up, as you can see here. And then price has taken out all of this liquidity right here. So many stop losses would have been hit. So many people would have been out of the markets. And you can see it from every time frame. That's clearly what's happened. And it now is starting to support a bearish structure for Euro. We are obviously still in a bullish range. Now, when you look at the daily, the thing you've always got to be doing from a higher time frame always is identifying where you think price is going to go long term. And when you see here that we are pretty much bullish on Euro, and this entire range has needed to be rebalanced. So if we measure the whole of this entire range with our fib levels, we can see here that we've obviously got the discount level below 50%. And then we've obviously got our kill zone in and around here. So the first thing you always have to be doing is identify, firstly, your 50%. Okay, we also want to know where our trading range is. And we can see here that we've obviously got this kill zone. So utilizing this kill zone means I can now delete these fib levels, because essentially price, if it wants to, can react at the 50% level. But what we have to do, and if I actually remove everything, so when you identify your range, it's important to do this with everything you do, because when you are in a bullish environment, you want to be buying anywhere below this line here, or even on this line here. So when you get into this line, you can start looking for high probability buys. When you are above this level, you are in the premium zone, meaning you can be selling price in here with this area here as a target. Now, what you have to do with this information is identify what is actually on the left. So if we look at the 50% level, we can clearly see there is imbalance that covers in some of it. Obviously, it doesn't cover all of it, but it does cover some of it. We can see here we've got this daily imbalance right here. So that's obviously another area, and we know that is well within our kill zone. So we're expecting price to at least retrace to 50% and cover up some of this imbalance. But it's unlikely that price, well, it can happen, but price comes and does something like that. There's imbalance. It obviously is an imbalance fill, but it hasn't come to the 50% level. So what we need to do is go down a couple of time frames and just try and see if there's anything as close to possible to this level. And at the moment, we can't really see much. I can see imbalance here because there's a different candle starting. And then we can go down and down and down. We can start to see a little bit more So now you can start to see the picture of what's really going on. And then now we can start to see things like 1 hour imbalance. So we can narrow that a little bit more. Oh, didn't want to do that. I apologize. So we can narrow that down a little bit more. We can also note this imbalance right here as well. So that's firstly, now what I've done, working from a daily time frame, I have, and that's the imbalance, I've identified my point of interest on a daily time frame where we like to sell price. So we can start going down to smaller time frames, and then what you'll see is that price is obviously starting to distribute. So now you can start getting some really nice sell opportunities on. As you can see, price has obviously started selling off for a while. And you can see here, you could have been getting an abundance of sell opportunities in these areas here, right up until, let's just speed this up a little bit. As you can see there, price is selling off. So we're very bearish at this point. You should really be bearish right until we get to the discount level. And then we can see here, when price came into this imbalance, we started getting reaction to the upside. You can see here, price started moving to the upside until obviously we got to yesterday when we had high impact news and price decided to go even further. So obviously you could have, we did get some really good buy opportunities targeting these short-term highs and things like that. Price ended up taking this liquidity with news and then dropping even lower. And now price has obviously dropped even lower. We can see here what's kind of been happening as we've gone on, and that brings us into today. I think that pretty much brings us into exactly where we want to be. So yeah, let me just go back one. So that kind of brings us in to where we saw price. Now we know we're in our kill zone. We know we're nearly at our imbalance and things like that. Where can we be looking to, what can we be anticipating for the London session today is really the sort of question you need to start asking yourself. Now, it obviously gets into London session. We know that the opening price is midnight New York. So we're using this level here. That is when price opened. So this is obviously now what we're doing is we are analyzing in preparation for London session. First thing you have to identify is where is price, where is liquidity? Okay, so on a 1 hour time frame, we need to assume we're still bearish. As much as we are now in a discount line, we're below the 50% level. We've obviously come below that imbalance. We've come below that 1 hour candle. We don't need that stuff anymore because we've come away from it. We've obviously taken all of this liquidity. I'm going to delete this line because we know we're in a discount level. But are there still sell opportunities on? Yes, there are, because price is still very, very bearish. Until price breaks above here, I'm going to carry on assuming that we are bearish. So we can highlight this 1 hour candle. Is there anything near this 1 hour candle? Because what we're looking for prior to our trading is we're looking for a draw on liquidity. Okay, we're looking for a draw on liquidity. So we can see here price hasn't yet hit that area. So we've got two areas of liquidity. We've got this area right here, which is our draw, or we've got this area down here. Now, if price comes for any of these areas, first, I'm going to be looking to distribute here or accumulate under here. I'm not going to do any trading inside here until one of these levels have been taken out at the very least. We did get a liquidity draw here, but we looked like we were going to respect this level, and obviously the 1 hour candle was here as well. So when we go more and more into this area, we can see price tapped into this London area here. And now all I was doing was just going down the time frames and seeing what was happening. So as you can see, and I'm at the charts usually by 8 o'clock. So I'm coming on around here. Okay, so that's when I'm active on the charts. I can see already we've come into this area here. We've started breaking a little bit lower. So when price has broken lower, I saw price breaking all the way down here. There's your area of imbalance. You don't need to be on a 1 minute chart. There is a 1 minute entry right there. You can see the imbalance it got tapped into. I did enter here. I got taken out of break even, but I re-entered at this 2 minute area here. So when you can see, we've obviously got this area here. You can have your stop above there. You can be conservative, have your stop above there. What's the actual target? where is this thing going? We have to know and identify where price is going to. And you can clearly see here, it's going towards sell side liquidity. So when price has gone to sell side liquidity, I'm out of the market. I don't care what happens after that. I saw a nice reaction and I noticed we started leaving more imbalances. So once we started leaving more imbalances, I'm going to identify what is going on inside here. So you can move around the time frames. I was shopping around all time frames from 5 minute down to 1 minute. What I noticed was this breaker block right here, okay, or this breaker area right here, if you want to call it. And we also saw this imbalance. So I was break even by this point. This was just another trade. Okay, you can enter off the breaker. You can have your stop above this candle. You can have your stop above that candle. I felt like being a bit aggressive. I was risking less anyway because of high volatile news. And then you can see here that price is going to tap you in. As you can see, taps you in and then go for that liquidity. Now, there's your two sells. Okay, there's your two sells, a 3-to-1 and a 2-to-1. So if you risk 1% on those, that's 5% for the day. So far anyway. Now, we are obviously below midnight open, so it's not optimal selling conditions, but we are heading for sell side liquidity. When price reaches sell side liquidity, you can anticipate accumulation. Now, I still think this has got a lot of potential to go lower. I think someone said in the chat that it has created more equal lows, which yes, it has. I think it's engineering liquidity to essentially take those lows with more impact news. And you can see here, this daily candle is obviously in drawdown and things like that. So maybe it's going to come up and then go lower, or maybe it's going to, New York session is going to attack both sides. So what we can see here on a smaller time frame is we can be looking to identify what is going to happen. So, you know, on a 5 minute time frame, you don't need to be on a 1 minute time frame just yet, but we can see here, price has made a new low. Price has closed below the sell side liquidity right there. Price has started breaking higher. So now I'm not necessarily just going to enter straight off here, stop here. I mean, you could, you know, come up to this area here. What we need to now start doing is identify really this entire area, because we can look at this area here. We can measure the range. We can see that obviously that is in a discount level if price comes a little bit lower. So what I want to be looking for is to see what's going to happen when price comes into those areas there. And then at this point, we can start looking at 1 minute time frames, at 2 minute time frames and things like that, because you'll start to see when price is making those moves, it's going to give you some decent looking opportunities. So as you can see here, price is obviously in that area. So, I mean, there's a couple of areas you probably could have bought. You could be a buyer in here, for example. Okay, this would have been a more highly probable area to be a buyer in, because price, I mean, if you're looking at it from a auto, that just looks rubbish. If you're bringing it in a little bit more, what we can start to see here is another area of imbalance. Price has disrespected all of this area. So we got the break above, nice big engulfing candle. Price comes down aggressively. Not many people are going to enter there straight away, or I wouldn't necessarily enter straight away, not on a 1 minute time frame. I like to wait for another area of imbalance, which has been created right here, and then we can look to get in. And your target, so you can get in here, and that's the wrong one. So we can get in right about here, stop there, or stop here, however aggressive you want to be. You can get in right at the top. And realistically, where is your target? So we're looking to target the London high, because that's essentially where price should be looking to travel towards. And you can see here, that's clearly where price started pushing. Now, there are areas of liquidity that we can react from. You can anticipate that price will come up to here and react and go lower. So these entries aren't as highly probable, but they would have played out in this case. And as we can see, speed this up, price ended up taking that high. So, you know, some decent opportunities right there. And that's obviously where price is now. If you held that, obviously you're at just about a 10-to-1. And it's just about anticipating price and things happening under liquidity. Now, I can tell you all now, if you are just trading on a 1 minute time frame, and you're not taking into consideration the higher time frame stuff, you're going to find things very, very hard. I'm only looking at a 1 minute time frame after price has come into these areas, accumulated or distributed. I am only on a 1 minute time frame or a smaller time frame when I know that price is going to hit my levels and then react. And this entry right here, where price come in here and retrace down, is all about time and price. London open. It's going to give you a big push up to take out some kind of either sell side or in this case buy side liquidity. Price then takes out that sell side liquidity there, and it's now taken out that high there. It looks like we're going to have a bearish day today. So for New York session, what can we anticipate? So we know we've closing below that liquidity. We know we're near that daily imbalance. This is now the area I'll be looking in. But we want to have a liquidity draw. New York session plays are not going to work without liquidity draws. So if we've got a liquidity draw in here we can focus on, then there's every bit of potential. And at the moment, I don't really see one. Okay, we want some kind of a draw. This might be a draw. This might be a draw. Maybe come under here. Or it might just be using the London session, what that grabbed. So it might be that New York session continues into that area to push higher. And in terms of targets, realistically, this imbalance, I feel like we are going to rebalance price action. And for today, or even going into Monday, I would expect us to do what? Come to at least 50% of this level, because that is 50% of the trading range. And interestingly enough, it looks like that would be pretty much in line with this daily candle right here. So really nice area, actually, that 50%. Could come higher, could come to this 4 hour, but it doesn't have to. Just remember, it doesn't have to. In terms of overall bias for the future, I do still believe we can come a little bit lower to take some more of this imbalance, but it is reacting. And as someone said in the Discord earlier, there are more equal lows and things like that being created. But it's clear here that we are generating more liquidity. Maybe price is going to come into here and then drop. We will have to wait and see. Or New York session is going to use this as the liquidity draw. So there's obviously highs here now. Maybe we're going to go higher than this into this imbalance and then distribute. So today's price action would be sells during New York, come down to these levels here, and then probably in the PM session, price will start coming here and do something like that. Because essentially, guys, what you need to be looking at is from a weekly perspective. And when you look at what's really gone on in the week, let's draw how it obviously happened. Now we can see here, the candle opened around here. So let me just turn that to a plain one. So you can see what happened. Okay, price opened, rallies higher. Well, actually rallies down, comes up, rallies higher, shoots down, comes up again. So that's the week's action so far. And at the moment, this is what the weekly candle is going to look like. So what's the likelihood that's going to happen? The likelihood is it's probably going to close around about where it is now, or price will come into this area here, retrace lower, maybe just fill in some of these areas, finish on a bearish day, because London session's clearly making a move to this upside now. And that is how you're trying to identify. That's the weekly high, that's the weekly low, which would set us up. I mean, let's say it finishes where it is now. Move that, neaten up a bit. Let's say it finishes where it is now. Next week, I'll be obviously looking at where we are. We can see we're obviously pretty bearish. I'd be expecting price to maybe come into this level here and then start targeting that high and finish on a bit of a higher move. So what the next week would essentially look like is maybe something like that. And then maybe something like that. So what we would end up with is another wick coming lower, and then maybe that wick higher, whatever. And that's how you end up with a bearish move or a bearish week. But you can identify at the start of the week, we're probably going to be bearish, and then it's probably going to be bullish from then on. So maybe Monday and Tuesday could be bearish weeks, bearish days, and then price would look to obviously push higher. And that is what you always have to be considering. And you always have to consider that on a daily time frame as well. And all these time frames, they all have power of 3. You can see here, this 15-minute candle opened here, retraced into this area here, pushed higher. If you wanted to be a buyer inside this 15-minute candle, you need to be looking at what is inside there for price to move higher. Why is it? What does it actually come into? So if you dissect that a little bit there, and we identify this candle, just gonna get rid of that. I'm just gonna clean this up a bit. So the higher that candle, the lower that candle. Right, now we go down a smaller time frame. Let's see why price went lower. We can't really see much at the moment. What can we see in there? 3-minute imbalance. Anything more? Yeah, you can see it there a bit more clear on the 1 minute. That was the target. So this is the open of that 5-minute candle or 15-minute candle. Price came down, retraced, pushed higher. And you can see it there on that 15-minute time candle. We're bullish overall. And because we know we're bullish, what can we identify? And why are we bullish? Because we've still got this target here. So you could have generally, even on this 3-minute here, you could have been a buyer in here. On the emphasis that you've done your research and you know you're trying to move higher, you could have your stop a little bit lower, whatever. I mean, it's too high to really buy, but hopefully you get the idea. You know, looking at it now, realistically, that should be a target. Looking at the next candle, where do we see price potentially coming down to? I think the next candle's literally starting pretty soon. Or I'm in replay, aren't I? That's why it's not working. So you can see here, we've opened up a new candle. Price, little dink into there, pushed higher. You know, I think potentially we can come into that imbalance. So this candle here is obviously just pushing. I'd like to see us come in there and then continue moving higher. So that's EU anyway. That's essentially what I see. That is how I'm looking at the markets. I'm always aware of what's going on in my surroundings. I understand that, you know, these things do work more often than not. They don't always have to play out. They can change the agenda. I mean, I was looking at moves in here to go higher yesterday, and obviously price decided to take a dump to the downside. So there's no reason to think that you're going to be right every time. You are going to be wrong sometimes, and that's fine. I'm wrong plenty of times. But I trust the process. You know, I know that if I take 10 trades in a week, they're not all going to lose. Even if you have a bad week and you lose more trades, if you've got appropriate risk management, then the trades you win are going to outweigh the trades that you lose. So that's stuff you really shouldn't be worrying about. And if you are worried about risking too much and losing, then just simply bring your risk down, guys. Bring your risk down. That's all you can do. Looking ahead to the indices, so, I mean, we can see here, we've obviously taken out that target. We've obviously distributed, as we can see. So really nice distribution on the 15-minute. Price came back in. There was a really nice sell opportunity in there. And then London sessions kind of just been playing around. So this makes a little bit more sense for today, because I still think price should be, I mean, the way it's going, we can clearly see we're on a tangent to the upside. So what I would like to see here is price maybe come a little bit lower, close below there, mitigate back into that area, which would be the London open or the London low, whichever one it wants to do. We have got imbalance in there as well. With news and things like that, I wouldn't be surprised to see something like that happen. But, you know, I'm not looking here straight away. I'm looking here. I'm not going to entertain anything in here, but I am looking under the low. I'm looking here Obviously, if we don't get that accumulation to the upside, I'm not going to be looking to get involved. I would like to see price take PM session liquidity to the high or the low as well. So if we do push higher and we close or come above this session indicator here, I will be looking for sells to continue moving lower. And that would obviously support the higher time frame on what we're doing. The only other thing to bear in mind is that we can see here we're respecting this area pretty well. So it might be that we end up pushing higher today. But looking here, we have broken on US 500 and we have closed below. So we have got some divergence on the indices at the moment. Again, maybe something inside here would be ideal, but we can bring that down a couple of time frames, just see what's happening. So maybe having a look inside this imbalance. But again, on a Friday especially, I would like to see, so that would obviously take the London high, but I'd like to see taking the New York PM session as well. That's personally my preference. So yeah, that is the only pairs I look at, to be honest with you guys. These are the pairs I trade all the time. And I mainly do London session on Euro. I don't really look at the indices during the London session. And in regards to the New York session, I'm mainly on the indices. So I'm flicking between US 500 and US 100. So yeah, it's all pretty good. But you guys tell me, how have you been getting on this week? Have you been getting any success? And are you starting to see the markets in the same way that I'm trying to show you, if that makes sense? So when you're looking at things, are you identifying pools of liquidity? Are you identifying trends? Are you identifying which way price should go? Are you taking news into consideration? Because once you get all that, guys, it's really not going to take you long to really build up your accounts and get those funded accounts. Because once you get one funded account, you can get two funded accounts. Once you get in two funded accounts, you can get a third funded account. And you can go on and on and on and on and on. It's just about practicing that skill. The first part of what you on EU makes sense. Then you lost me. I'll have to watch it again. James, that's fine. Do you know what? There's nothing wrong with watching things over and over just to make sure you get it. But let me draw it in a bit of a cleaner area. Let me go to random. Yes, it's getting a bit easier to see the setups. It's just taking the plunge and taking the trade. So what I would recommend you do, take the trade on a much smaller risk, because you can't just sit there and watch it play out. You have to be involved. You have to experience the losses, the wins, the break evens. So if you're on a live account, I mean, I would always say you should be on a demo account if you're learning. But even if you're on a demo account, you don't want to risk your fake money. Take super, super low risk. I'm talking 0.10, 0.20, 0.25%. Because that is nothing on your account. If you've got a £5,000 demo account, 0.25% is like £10. That's £10. Let's just, and then if you're on a £100,000 demo account, risk the same, risk just less, because what's going to happen is you're going to take more trades. You're going to identify the trends. You're going to identify where you should be. You're going to identify what your weaknesses and strengths are. You're going to be able to actually log things on your trade journal, which I've said from day one to everyone, you should be having a journal. You should be journaling absolutely everything that you do, because it's going to give you the data after each month to show you where your strengths are, to show you where your weaknesses are, and then you can improve it for next month. So for example, if you are losing all your London trades, but you're winning all your New York trades, next month you're going to stop trading London, you're going to trade New York, and so on and so on and so on. But more often than not as well, if you're risking less, it's going to help you build confidence. So when you build confidence, what you're going to do is you're going to start increasing the risk a bit more. Now you can increase it to 0.5%, and then you're going to keep winning. You're going to make more money. You're going to know that you do lose trades from time to time, because that's how it works. It's how the process is. You're not going to win every trade. And then what's going to happen is you're going to put the risk up to 1% and then to 2%. And then suddenly you can see yourself making some serious money, and you've got yourself experience in the markets. That is how you build up an account. That is how you build yourself up to be a confident Forex trader. And that is what I would 100% suggest doing going forward. It's just so important. Okay, it's just so important, and nothing can substitute experience. When you get that experience, it's really going to help you going forward. But all I wanted to do was just show you a bit of an indicator of really what we should be looking for. Okay, so if this is typically your Asian session, what you're looking to do is in the London session, if let's say we're bullish for London, you want to see a draw on liquidity, and then you want to wait for price to move higher. So you can obviously get in the move here. And then if London is trending high, you want to see a New York session. So let's say this is London session here. And then if New York session, if this is a trending day, the chances are New York session is going to carry on that trend. So you want to wait for a draw on liquidity in the premium. So if this here is New York session, you can see here we've got the draw on liquidity. Then we've got the draw on liquidity here. That's usually if you're in a trending market. Now, if you're getting a really slow situation here with Asian session and London session is taking out liquidity but not really doing a lot, then what you can anticipate, oh, is that not that color? Just change that. Then what you can anticipate for New York session is price to do that for New York session. So New York session becomes the one that takes out both sides of London and the sell side of London. And that's only if it's not working properly. And what I would say is use this indicator that I've got and identify what typically happens. So look at what we can see here. London session moves down quite aggressively. Draw on liquidity right here. And then what? Comes up, carries on lower. London session, huge move down after taking out that liquidity right there. And then New York session, big push up, takes that liquidity, carries on, even consolidates. London session, trending. New York session mitigates into it. And this is EU, by the way. This is EU. You can see here, price comes up, a little bit of liquidity, big push up, down it goes. But if we go onto the indices and we do exactly the same thing, I promise you're going to identify something a little bit different. Because you can see here, London session's a bit more consolidating. New York session pushes higher, attacks the low. London session, consolidation. New York session, liquidity break. Targeting London low. Look at that. London session, consolidating. New York session, taking the low, taking the high. So it really depends on what pair you want to trade. Because if you trade euro, and this is why, and this is the thing, guys, my own backtesting, my own research, my own journaling has made me understand and realize the better trade to trade in the London session for me is Euro USD, based on the fact that I know Euro USD moves more in London than it does in New York, compared to when I trade the indices. And I can see here, New York session moves a lot more. So in New York session, in the afternoon, UK time, I'm trading on the indices. In the mornings, I'm trading London session. And that is how I come up to find my pairs. So I will put this in the Discord for everyone, all members as well. I'll put this on the Discord, and I'll put the times in which I use them. And then you can essentially go onto any pair you want. Go onto any pair you want and just identify what moves when. So what suits your lifestyle. Because if you trade in the PM session of New York, which is essentially evening of night at the UK, you can see here, this isn't really the best time for me to trade because I'm not really getting any big moves. So maybe if we move on to, back to the indices, to be fair, you can see there more movement, more movement, more movement. Maybe looking at GU, see what that does. Nothing in the PM session. A little bit here. That was a news day. Let's look a bit further back. So look, nothing there, nothing there, nothing there, Nothing there. But look, when do we move? London. Bit of consolidating there. London and New York. More London. So see what I mean? Like that's really going to help you guys. It's really going to help you guys with your back testing. And you don't have to look at the setups. I'm not telling you to look at the setups. I can tell you now, guys, I can tell you now, there's going to be setups in here. There's going to be, well, there probably won't be many setups in there. There's going to be setups in there. There's going to be setups in here. Like, there's going to be setups all over the show. And what we're identifying is just when these areas move. Now, why would this London session be really, really quiet on Euro and this PM session be really, really fast on this particular day? Can anyone highlight why both of these sessions were quiet? And feel free to put them in the chat. If you, and there's no right or wrong answer, I'm going to show you how I see it. But don't be afraid to put an answer. News, 100%. So look here, Wednesday, 26th of July. Let's go back to the 26th of July. July 26th, 2023, 7 p.m. USD. That is the New York PM session. Okay, it's the New York PM session. So why is this slowing down? Because it's engineering liquidity. It's building liquidity. So what you end up doing is forcing a move in here, probably getting stopped out due to consolidation. And then either way, if you're in a trade or if you're not in a trade, the PM session is going to take all your stop losses and it's going to take all your stop losses here as well. And it's based on news. So from now on, if you ever see this event at night time, UK time, so New York PM session, don't bother trading that day. There's no need to trade that day. And then we can look at what else we see. We can see more news coming on the third. So this was yesterday's news, Thursday. Why that's maybe explains why London session got taken out and things like that. It's going to be interesting to see what happens today because prices rallied lower and then pushing higher. And today we've obviously got this news coming in along with all day Euro news. So it's likely the trend will carry on, but whether or not it comes to here or comes below there, we'll obviously wait and see. Or it will carry on moving lower into this imbalance, which is what we want anyway, and finish on a bearish day, which is fine. Does that make sense, guys? And let me know in the chat if it doesn't, or if there's anything else you're struggling with, because I'm here to help. This is really something that you need to seriously just pay attention to and focus on if you want to make it as a trader, because I can tell you now, guys, trading is something you don't have to overcomplicate. I don't want to hear all these silly big words that are related to trading. Just focus on pure price action. I can tell you now, if you can understand the overall bias of where you would like to see price travel to next, even if you get it wrong sometimes, overall, it's going to set you up for a very successful trading career. But the key thing for you guys is to make sure that whatever you do not give up. Whatever you do, you keep working hard. Because one day you're going to wake up and it's just going to be like clockwork. You're going to wake up and it's just going to happen. You're just going to be able to extract profits from the market on a consistent basis. And you're going to win. And you're going to make money. So I'm seeing comments in the chat now saying, I hope so. You need to change the terminology around that already. Turn that I hope so into, yeah, I can't wait. I know it's a matter of time. It's a matter of when, not if. Yeah, that's exactly what we need to be looking to do with our terminology and the way we think as a trader. I had a really amazing thought the other day. Is I've spent as long learning this as what people do when they have study for degrees. So anyone that comes into forex trading thinking this is a get rich quick thing, like that was just my learning span. It can take you less, of course it can. It can take you longer, but it's one of those that when you get it, you will have it, and it will be a skill for life. It will be an absolute skill for life. And like I said, you can go down the route of funded challenges. You can go down that route, and when you pass your funded challenge, you can just go and get funded accounts. Why leverage your own money? Whilst those funded challenges are about, then they're there to be utilized, in my opinion. So we've got another chat here. I'm new here. Yes, this will be shared on the website for both courses. This particular one might be going on YouTube as well. But yeah, it'll be on the website firsthand. So guys, have we got any questions? And it's been a really good week so far. All you have to do is ask if you need any help, guys. Okay, I'm here to help. I'm here for you to lean on if you need it. And all I would say is just keep doing what you're doing. Keep doing what you're doing. Keep developing the way you are. Don't sit there stressing about it, because it's one of those things that it's just building a life skill. Don't get too carried away by all the junk you see on social media, by all of the crypto people, all of the stuff. Like, just keep your methodology as simple as you need to make it. There's a lot of very dense information you can find on YouTube and things like that. Stick to one education platform, stick to one system, stick to what works for you. And whatever you're doing, you're going to see yourself taking small wins every single day. If you can take small wins every single day, it's really gonna help. It's really gonna help. So, guys, a couple of questions very quickly coming up. Can you use social trader tools for having multiple platforms? I don't know. You have to look on the terms conditions for that particular prop firm you're using. I think most prop firms require you to have a stop loss. So as long as you're putting your stop loss in place on each trade account that you've got, I don't see why not. I've got another question here. Do you do one-to-one? Yes, I do. So just message me for that. Just message me on Discord for that. But guys, I will leave it there. Okay. I hope you enjoy your weekend, whatever it is you're up to, and have a great Friday. Have a great morning, afternoon, evening, wherever you are in the world. And I will speak to you all very, very soon. Take care, everyone, and see you on the Discord.